Imagine a Wisconsin dairy farmer watching crop prices crash. Yet her vintage Airstream now brings in more weekend revenue than selling beef and lamb combined. While big city Airbnb markets tighten, smart investors are quietly turning unstable rural land into cash flow machines with glamping and short-term rentals. Today, we're diving into the 2026 gold rush, glamping plus Airbnb in America's economically unstable areas. This niche is delivering strong returns while traditional real estate struggles. Stick around. By the end, you'll have a complete playbook plus the top rural targets for this year. Market overview. First, the numbers don't lie. According to Grand View Research, the U.S. glamping market hit $829.4 million in revenue in 2025 and is projected to explode to $2.055 billion by 2033. That's a powerful 11.9% CAGR from 2026 onward. Cabins and pods already own the largest share, but unique structures like domes and tree houses command the highest nightly rates. On the Airbnb side, AirDNA's 2026 outlook confirms rural and small city markets are the standout performers. Supply growth is slowing, creating scarcity. Prices are rising fastest there, and demand stays resilient, especially in mountain and lake areas. This is shaping up to be the strongest investment environment since 2021. Farm stay listings on Airbnb, HipCamp, and similar platforms have surged 77% in the last 5 years, twice the growth of regular listings. Why now? Post-pandemic demand for nature escapes, remote workers, wellness travel, and unique experiences are all colliding in 2026. Rural America is where the real money is being made. Why unstable areas are the sweet spot. Why focus on unstable areas? Because that's exactly where the opportunity is hiding. USDA data shows U.S. net farm income is forecast at $153.4 billion for 2026, still roughly 24% below the 2022 record highs. Crop prices remain at multi-year lows, and the agricultural economy is under pressure. But here's the flip side. These same struggling rural counties have dirt-cheap land prices, far fewer short-term rental bans in many areas, and built-in demand from city dwellers desperate for weekend escapes. AirDNA's 2026 outlook highlights that coastal, mountain/lake, and rural resort areas show the most favorable conditions for investors. In stable big cities, you fight sky-high entry costs and heavy regulations. In unstable rural zones, you buy low, add glamping wow factor, and earn premium rates that traditional farming can't match. Real case study. Let's look at real farmers who are already winning. Take Pink River Ranch in Blanchardville, Wisconsin. Farmer Britt Thompson turned a vintage Airstream into an Airbnb. The rental income now far exceeds her beef and lamb sales. Guests from Chicago come every weekend. In Illinois, Heap's giant pumpkin farm added pick-your-own fields, hay rides, and a corn maze. They're pulling in tens of thousands extra every year just to survive tight margins. Over in North Carolina, Smoky Mountain River Ranch built cabins and hip campsites. The extra revenue is paying down debt and keeping the family farm alive. Reuters reports that across America, agritourism now adds $25,000 to $100,000 plus per year for many farms, some reaching $1 million. The entire agritourism industry is worth $4.5 billion, and U.S. Airbnb farm stays have generated hundreds of millions collectively. These are farmers turning instability into income. Investment strategies that work. Here's your exact 2026 playbook. Step 1. Target rural or post-disaster counties with cheap land plus tourism draw. Think Wisconsin dairy regions, Illinois farm belts, North Carolina mountains, or recovering Texas coastal spots. Use AirDNA's market filter. Step 2. Choose your mix. Start with proven cabins, then layer high-margin domes, tree houses or Airstreams. Step 3, stack revenue. Add pet-friendly fees, $1.17 to $1.25 per night, hot tubs, saunas, and farm experiences. Unique glamping features command $200 to $300 plus nightly rates. Step 4, platform strategy. List on Airbnb plus HipCamp plus direct bookings. Focus on summer weekends, but market shoulder seasons with wellness packages. Financing tip. Use USDA rural development loans or partner with struggling landowners. Many will trade equity for build-out help. Expect $80,000 to $120,000 total per glamping unit after land. Hands-off operations. Run it faceless with tools like Lodgify or Hospitable for automated bookings, and hire a local co-host for $200 to $300 per month. Pro tip. Get a professional glamping feasibility study. AirDNA calls 2026 the best investment window since 2021. Slower rural supply growth equals higher returns for early movers. Risks and smart mitigation. Of course, no investment is risk-free. Seasonality, surprise local regulations, climate events, or insurance spikes can hit rural properties hard. Insurance note. Glamping requires specialty policies. Expect 20 to 30% higher premiums in flood or wildfire-prone areas. Bundle with agritourism liability coverage. Regulatory red flag. Even rural counties are tightening. Always check zoning, register for short-term rental licenses, and review AirDNA's regulatory map. Some Wisconsin and North Carolina areas now have night caps or permits. Competition warning. AirDNA shows rural supply still expanding in 2026, when by going ultra-unique instead of copying basic cabins. Smart mitigation. Diversify with agritourism add-ons. Choose regulation-friendly counties, partner with local farmers, and focus on unique experiences so you never compete on price alone. The operators who build community and wow factor are the ones thriving in 2030. Financial prospects and ROI. Now the money talk. In top rural markets, you're seeing average daily rates near $250 and solid occupancy. Add glamping premiums and farm experiences, and many operators clear $25,000 to $100,000 plus extra annual revenue per property. Tax win. Glamping units often qualify for accelerated depreciation and farm tax breaks. Many investors see 20 to 30% effective tax savings. Exit upside. Rural properties in tourism corridors appreciated 8 to 12% annually recently. Glamping setups often sell at a premium as turnkey businesses. With break-even often in 3 to 5 years, plus land appreciation as rural tourism booms, the ROI beats traditional rentals in unstable areas. AirDNA's 2026 outlook calls this the strongest environment in years for rural and mountain/lake markets. Bottom line for 2026 to 2030, while cities tighten rules and urban STRs struggle, rural glamping plus Airbnb is becoming the new gold rush. Unstable farm areas aren't a threat, they're your unfair advantage. The landowners who add glamping today will be the ones still standing tomorrow. Smash that like button if this opened your eyes. Subscribe for more niche real estate plays, and I'll see you in the next video.